Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Friday, May 9th, 2025. It's 11:31 a.m. Eastern Time. So I'm starting the video, so we're 2 hours in the trading day. Probably going to be my only video of the day, probably even the only comment of the day or post that I make today. It's Friday. Number one, and I said this yesterday in the video and in the comment sections, I'm just not seeing a lot of attractive long side trades with attractive RR. As you know, we've been shifting out, closing out longs over the last couple of weeks, shifting in, adding and highlighting new re-entries on shorts that we covered a couple of weeks back. I'm just going to give a quick recap on the equity markets and the things I'm watching, and just loop back to a comment that I made. And again, it was in the multiple videos and additional commentary back then when we bottomed here. So let me just start out here with QQ. Well, let's start with, let me get to the comment, and then I'll go to the charts, and we'll make it a quick video. It should be 15 minutes or less. Let me find that comment. Okay, now all I did is I just went back to, looked at the chart. Like I've said, we all know it was April 7th was the day of the bottom in the market. That was the biggest drop in years, especially at that rate of a descent. We broke all kinds of records for the biggest single day drops. In the Nasdaq, it was up to, since I believe the dot-com bubble, so it was a quarter century. 1 day largest day drop, a lot of records broken. Or oh no, that was the rally, that was a short covering rally which we were long for. And so at that time, and again this was repeated, and I'm doing this because the comments I made back then are exactly my thoughts now in reverse. In other words, let's just get to that comment. So on that day, again, the market bottomed on April 7th. One of the best times in decades to cover shorts if you were short the move down. Also one of the best time in decades to go long. We've made more money on the long side since that point than most people make in a good year in the market. And certainly much more than the average annual return of the stock, long-term return of the stock market, which is about 8%. So VIX had just hit T2. Remember at that point in time, we had already hit T1, had a pullback there, gave you a re-entry zone then, just like I gave you a re-entry zone now with this expected pullback. But let me go to the comments. And again, this is just take these comments and flip them in reverse. So someone asked about using hedges and indirect hedges to the long NQ positions. And again, this was conveyed in the videos then. No, at this time, I do not have any indirect hedges that I'm using in my active trading account. I am long equities and short the VIX, short treasuries. And treasuries, by the way, had just peaked as well. There was that flight to safety bid that I expected. We got that. And that was also, so that's a 100% short equities, just like back on the August 5th lows last year at the end of that correction, what I called a hard long or full long position, no shorts, no hedges. And so now I'm seeing the same thing in reverse. So VIX was a good hedge to being long equities coming into today. I mentioned that before. In other words, VIX had a little more upside, and we hit it that day. But now that T2, now that VIX hit T2, second price target, with SPY and QQQ hitting my next long-term targets. Again, that's T3 on the weekly charts. Those are the long-term targets. We have up to T7 on the downside on QQQ. We've only hit the third of that seventh target then. And so we were there, long-term oversold, increasing the odds of a tradable bounce, and then stated that VIX would likely pull back substantially if we had a half decent or better bounce this week, which we certainly did. Again, that week we ended up having, it was either that week or next. I don't know what day of the week that April 7th was, but that was it. And so if these long-term price targets on QQQ and SPY and T2 on the VIX prove to be merely speed bumps on the way to the next target, sure, VIX could spike up to T3 this week. However, I favor the former, which is the bullish short covering rally scenario over the latter, but will adjust accordingly on what I see today and as the week progresses. Okay, that's also a key word, operative word. I want to just pick this thing apart. Same thing on the right now on the bullish side. So everybody, I see it in the comments. I haven't turned the TV on in a while. I had it on briefly for the Fed day. That was it. I know that they're marching out the bull brigade as they always do, the cheerleading squad, market cheerleading squad. A lot of folks that were very bearish when we were covering shorts and going long here are now, of course, coming out of the woodwork as bullish and calling for highs in the market, new highs, and all that stuff. So I went on to say, and this again is just my thoughts. I just want to convey it because this is just read this, flip it upside down. I do not think the risk reward is favorable for opening new short positions on the stock market right now. Only longs with the appropriate stops below, of course. Typical swing and trend traders should stick with their trading plan and not be swayed by the big intraday swings due to the extreme volatility unless there are compelling changes in the charts that would do so. So I always speak to the longest term traders. Very few will hold out for what I call the prize. Again, if that's your wheelhouse, you're a long-term trader. As I often speak to, multiple accounts. I have active trading accounts and also long-term accounts, and I've shared my plan on those. Even that, and I've spoke to that in many of the videos, me, myself, if I anticipate, as I expected before, I was calling for at least a 16% bounce or roughly, or at least, it was back then in these videos around that bottom. And I've said this often, if I even think you're going to get a 10% bounce, I'm not going to ride that out short my long-term accounts or get back those profits. And I even mentioned a rare moving money into 401k right around this time, which is you can't really actively trade there. So again, guys, that's my thoughts. Let's go to the charts. I don't want to be redundant here, but it bears repeating. And what bears repeating as well is one of the few guarantees I'll ever give my subscribers. I'm not selling snake oil here. I tell you what I'm doing. I have skin in the game in this. But the one guarantee I'm going to give you is I'm going to be wrong, and I'm going to be wrong a lot. And so that's the important part. Just because that one played out doesn't mean this one will play out. In other words, that we stop here or up to around that 500 level. So far, we continue to tap on the 200-day moving average, just like we did back here, just like we've done in previous bear markets, going back as long as you can go back in the charts. Like I said the other day, I'd almost coin toss odds that whether they're going to pop it or not and kind of blow some stops out. But it's coin toss odds. So I would rather ride that out. Short. I told you I had a comfortable amount, but nothing close to an all-in heavy position. I need to and want to see, and that's why I'm doing this update, these trend lines break. And if things don't go my way, this is where, again, it won't be an initial pop right over 500. I always set my stops a little, try to put them out of range of what we call stop raids, stop pops. And just like I've been scaling back into those long-term positions in the bounce target zone here, I will be scaling out because each tick higher and every day that we go higher in there increases the odds that, yes, we could go on to break out the new highs. Only a fool will tell you that's not possible, that's not going to happen, right? Again, you've heard me say this once, you've heard me say it 100 times. I speak in probabilities, not possibilities, because just about anything is possible. So I scale, I quantify all my trades and probabilities, likelihoods, possible outcomes, and that's it. And what I can say definitively is we're still in that bounce target zone. This is exactly where I expect us to go. It's been a bigger, range only because, and it reflected my outlook, that we'd come in here, and that's why it wasn't a hard reversal, nor was this that long. I didn't, on August 5th, it was a hard reversal back here that morning of. That was what I said, covering all shorts, going to a full long positioning, and that was actually even lower than you see here because it was a pre-market. And again, it had to do with the Nasdaq 100 futures hitting one of my longest term targets, and everything else, all the big stocks. And this was more of a scale out, scale in. It was, and again, that post said it all. It's all about risk reward. Again, I would have rather been long, been stopped out, or had to experience a little bit more drawdown before reversal than to go against what I believe is going to happen. And if you go back in those comments, I also said that, one thing that was going to happen is you would see backpedaling on the tariff talk, and everybody talked like it was unexpected. Trump said he was going to do, but then again, Trump talks a lot of shit. We all know that. And he was going to build a wall last time around. There was never a wall built, all that kind of stuff. So I get that. And I'm not going to sit there and tell all the people that were long and rode this out that, hey, he said he was going to, increase tariffs. But the important thing is, I've done this long enough and I've been around. This is not my first rodeo. And as I stated then, the abatement in tariffs was, to me, a near certainty. It was just a matter, and as I said in some of those comments around that time, it would most likely happen sooner than later. It had to happen, like I said, or we'd have the Armageddon scenario, and I told you the odds were very low, meaning the market was pushing the red line, the financials, everything else, and things would have broke. So that's it, guys. I know I've been saying that, but here we are, and now what I wanted to do, the update as we head into the weekend. The same levels a couple days ago, was earlier this week. I've highlighted these uptrend lines, and that is what I'm waiting for before adding any. I have a comfortable allotment of shorts, nothing too crazy yet, but I will increase that position if and when this breaks down, and then I'll have enough dry powder, and I'll just feel the charts out as we go. Most likely it'll be a drop below 466. The bottom of my bounce target zone will most likely be where I have my full fill or share of long-term swing shorts for the next leg down. And then don't underestimate, just like I warned back here before Liberation Day, before Trump even stepped up the podium, I gave you what I called a lights out level, and that was it. He stepped up the podium. And again, you can say it was all that, Trump announcing the tariffs. Again, it was expected. He talked about it. It was going to be Liberation Day. And when he actually spoke, then the market dropped. But it at that moment took out that lights out level, and that was here, and that was that again. And and that's the thing about technical analysis and trading. We saw it the other day with Carvana. If you want to do this full time, if you want to make money as an active trader, swing trading even. Remember, when the VIX spikes, my swing trading frequency increases. Some people have asked sometimes, and I tried to define what a swing trade is. Swing trades typically, a typical swing trade, the holding period I usually say measured in a couple weeks, 2-3 weeks. But that can range drastically depending on the security and the nature of the chart pattern. Some of my trades last a couple days, some last months. On swing trades, some even last a few hours if it's an explosive move. So when volatility is high, and that's my point I'm trying to make, that happened in the after-hour session. We took it out in the futures. I gave you the level on NQ on before Trump hit the podium that day, and then when it broke, I posted an update. It might have been in the comments section or on the front page. That was it. Lights out level taken out, and that happened. And you had in just again, if you waited for Kramer or anybody else to come on CMB tell you to sell, you missed it. It was a 14% drop from there in just 1, 2, 3 days. And so same thing, for example, with Carvana when they reported, they blew earnings away. They hit that first target. You had to cover in the after-hour session and reverse if you wanted to game a bounce off T1. And then yesterday it was thrown out again, and now it's so far it's down 5% today, so it's a nice re-entry there. But let me go over the rest of the levels and I'll wrap this video up. These are the uptrend lines, again highlighted recently, and we're pushing right on them. So again, we're pushing against the 200-day moving averages. SPY has yet to make it all the way back to the 200 simple, but usually you're not going to have both QQQ and SPY always hitting their 200s at the same time. It's one or the other that usually caps the rally, and one will sometimes shoot past it, one will fall a little shy. And again, if you're new to the site, I have to repeat this because there are sometimes new subs coming in. I use both the 200 simple and the 200 exponential moving average. That's the blue and red lines. So that's it. And again, things start to change for me when if and as we start to move above those bounce target zones. SPY, it's right here. You can see yellows, these are the big levels, about 575, give or take. And likewise, so that would be bullish. And again, it's more of a, if you will, an incremental thing. With every tick higher and every day that we're above there, it increases the odds that we're going up to new highs. But right now, and I haven't wavered on where I think things are going, and I view this as a gift to or an objective opportunity, let's just say, just like back here. That obviously proved to be a gift, going along back there and covering shorts, and I think the same thing here. And that's that. So there it is. SPY, starting to crack. Let me turn off all the lines here. We can draw it a couple different ways. You can take a line here. You can cut the candles right there. You can cut them. That's the line I had and gave you last week or earlier this week, and we're cracking a little bit below it. But again, I usually do what I call BOD, and again, we'll know next week. Look, if you have to squint to see it, remember, these candles are small. And that's what I was saying yesterday. Everyone acted, not everyone, I'm sorry, my apologies. A couple thought like the lid just blew off the top of the stock market, exploded higher. This is just the gyrations right here as we test the 200-day moving averages. And this is fueled, just like I was saying, this trading range back here in SPY and QQQ, that sideways topping range, was energy building like a coiled spring. That's the analogy I kept using then, and I often do with trading ranges, and that a break in either direction that I highly favored. In fact, I went so far to say that even if we broke to the upside, I wouldn't take it and wouldn't expect it to stick, that it would be another divergent high and likely fail, and that's exactly what happened. That was actually one of our entries there when we had that, and we fell back into the range when the breakout to new highs on QQQ above the trading range failed. So that was an entry there highlighted. That was an entry when we broke down below it. That was an entry when we back tested the 200s, just like it was objected to cover there. So this is so far threading the needle, but patience is required, at least for me. I'm speaking to myself when I see kind of a range that's not as precise as my usual pivot points. And same thing was here. It was volatility was high. So there it is. So SPY is starting to crack below the trend line that I gave you. I'm going to thicken it up here a little bit just so it stands out, since I have a lot of other colors there. So again, so we'll see what happens. Probably not going to be today. Even if it is, guys, it's Friday. If you get a breakdown today, personally, I usually will pass on breakouts, whether it's a bullish or bearish breakdown that occur Friday, especially late Friday. They tend to prove to be whipsaws, kind of weekend position squaring. Sometimes you have options expiration, triple witching, quad witching, those kind of things, or end of month stuff. But either way, that's where we're at. We're right on the line, and my outlook and expectations hasn't changed in the least. See the PPO starting to turn down, roll over, and let me just go over the rest of the lot here. While we're on, let me go over the sectors. I'm not going to do them all. This is what I did in the video the other day for you. I gave you uptrend lines on the most important sectors. Remember, the little ones don't matter. Okay, I had to pause the video there. I don't know if you heard the little doorbell chime. I had a delivery truck come. I had to go get that, tell them where to put the stuff. I'm just going to rifle through the top sectors there. XLK right on the line. Also right here at the 200-day, where did it go? 200-day moving averages. If I can, this is what I was trying to do. There it is. 200-day simple, which exponential, I'm sorry, which also does a great job of defining that. Again, acknowledge that undercut of some stocks and sectors there, with the majority hitting that on the August 5th lows. And so that's why I'm very open and almost expect, it's almost coin toss. You're going to undercut the 200s when you're coming down from above, especially during fast moving markets. Now, this one's different. So ideally, we don't do it now. Why is it a little different? Because we've had that consolidation recently. Remember, the big moves were right here. And so when I talk again about RR, like I started the video with, it just, the risk reward's not worth it. I'm hearing, and again, guys, I welcome all comments. I'm just sharing my thoughts here. But when someone asked yesterday more long trade ideas, the money's been made, in my opinion. Now, we can go up. And yes, in hindsight, if we go up another, break out and run another 30-40% before there's a decent correction, sure, going to leave some meat on the some profits on the table, undoubtedly. However, I don't think that's the case. This was a 27% rally in XLK, about the same in QQQ, And, I'm confident we sheared most, if not all, the meat off the bone. Again, time will tell if we go up before a correction. And if something happens in the coming weeks and we do start to pull back here, but, I always say my analysis is, I always say the charts are dynamic, meaning constantly changing, and therefore so is my analysis. So let's just say for shits and giggles, we do pull back. In a week or two, I might be saying, you know what, based on everything I'm looking at now, I think it's a good time to buy, and I think we are going to go up and make new highs or take out the 200s or back test that primary trend line right there on XLK. There's the primary long-term uptrend line, which is clearly broken. So there's just too many things from a technical perspective that tells me this was a, break of a primary uptrend line, break of the 200 days, that this is a bear market rally. And again, that's, what you weigh the evidence, and there's always, I get it. I hear about the breadth thrust indicators. I hear about whatever, all the other reasons why the market's going to go to new highs and why we're not going to have a recession, why it doesn't matter. I hear those reasons, but again, this is what I go for. You can sit there all day long and then you get paralysis by analysis. You end up doing nothing. So let me just finish up here on the sectors and I'll wrap this video up. XLF cracking below, but again, it's a small little tiny doji, but we are below the trend line. And again, it's a well-defined trend line. So as I say, this bears repeating, it's a collective thing. In other words, if one sector, even if the big index, the one I like to trade, the Nasdaq 100, breaks below that trend line, to me, that's not a sell signal, or it's one that should be taken with a big grain of salt if, at the very same time, SPY, the S&P 500, is at or above its trend line, and the majority of the sectors in the S&P 500, and or, let's say, half or more of the Mag 8 stocks. So what I want to see is, again, the majority of these. And when I go through these sectors, remember that the S&P 500 is, these are I go through the sectors in order of their weighting in the S&P 500. So tech obviously holds the biggest weighting. XLF, second biggest weighting, so certainly important. And then it goes down the line here. You go to XLV, healthcare. I wasn't as crazy about the uptrend line. We didn't have as many reactions, but we are below it. And these are the trend lines I covered in the video earlier in the week. XLY, I told you I didn't want to force one. We could put one in now. We're sort of getting a trend line there. And again, like so many things, it's back testing the 200-day moving averages. And so that's it. So we'll see where this market takes it. We're not going to have any insight today. I don't care how high the market closes today. We're in too close a proximity. It's not going to close up 5, 6, 7, 8% today. That's a given. Nor is it going to close down that much today. So today we're not. It's going to keep you guessing. That's why I'm doing this video early. There's no point for me to do a closing market wrap because nothing's going to change today. So there's XLC. We are below the trend line right now. Nothing big, but it's we're below there. And then I think I went all the way down to XLI, the industrials. We're right on the trend line, right above it right now. XLP, again, wasn't crazy about that trend line there at all, so let's not put a lot of weighting in that one. And, just going back to, it seems like forever now, but it was just a month ago when the market was making its new lows. Or I'm sorry, the recent lows before this, big, high double-digit rally, or solidly into the double digits, I should say, and thrown out. Again, this is when you were getting longs, and nobody wanted longs back then. I'm just telling you guys from my experience. My trading style isn't always contrarian. I'm not always contrarian for the sake of being contrarian. When everyone's bullish, everyone's bearish. I do my own thing. The charts are my guide. Quite often, and I will say that again, quite often, probably the majority of the time, my trades are counter trend, highly counter trend, very contrarian trades, pick tops and bottoms, turns, and most folks want to buy when I'm selling, and most folks want to sell when I'm buying. I'm just telling you that. Take it for what it's worth. And then sometimes, I always say this, you try to catch a, it's not my expression, but you try to catch a falling knife. Sometimes you're going to get cut. Sometimes you might even lose a few fingers. So that's where, that's why recently when the market was bottoming, I talked about, same thing, scaling in initially, scaling out of shorts, scaling into longs. But then at that point, on the day of the lows, like I said, I was fully 100% long at that point. And this is that USDRR. Yes, I closed it out earlier this week, I think, just as a precaution in front of the Fed meeting. But remember, this was the April contract, as I showed you. And I did post, I wanted to share this. I posted an update this morning. So I gave you this target yesterday. This was my final target zone. And again, when a futures contract rolls, if I haven't posted an updated chart, the way to match, because the price levels are going to change every time, every futures contract, each month has different price levels. But what you want to do is to replicate the lines. That's how I do it. When we rolled to the Mays from the April, which I originally gave you here, it was catching these reaction lows. So then if you go back to today, I posted an update to the Ethereum setup I gave you last night. And in that setup, I said, should Ethereum continue to rally up to my final target zone from April 8th, that's where I just showed you, which is now about 2350 to 2480 on the May contract, and or the downtrend line comes just below, that would also offer an objective short entry or an add-on to a starter position taken here. Then I went on to post this chart today for you. Again, if you are interested in any trade, I will usually go back. If it doesn't warrant a new front page post, then I'll just post an update in there. And so that was it, to the button. Again, this is that same level right here, comes in at the same points. And so it was a perfect tag of the top of that target zone that I gave you right here. And that's, I don't know what it is in percentage terms. All right, here's the chart. We went long right here. I have to go over here so I don't move the lines, grab it up. So that's a call for a rally of up to 65%. Again, admittedly, I closed the trade early out of precaution, still for a very nice profit. This rip is just, I can feel the FOMO going. It's so thick in the air right now, you can cut it with a knife. This return to risk on, and it's so typical. It's a signature of a bear market rally. And again, I would much rather be wrong on that and be stopped out for a loss on some of these trades than to not take what I see. That these trades feel really good only because I'm sure they don't feel good to others right now, and that's one reason, if that makes any sense from a contrarian perspective. And so when I posted it for you today, we were right there. We had just hit the level so far. Nothing big so far, but a nice reversal. So there's, that's a potential downtrend. I should remove that. You know what? I'm going to do that right now. I'm going to remove that downtrend line in this video. Why am I removing it? Because it's no longer valid. Why is it no longer valid? Again, what you're hearing now is my definition, maybe not in the textbooks. There it is, remove this trend line. Because in my book, not that I've written a book, I'm saying metaphorically. In my book, it takes 3 distinct reactions to validate a trend line. We went through there, so now we only had 1, 2. I had it there as a potential trend line, but we went through it and we hit the top of my target zone. So therefore, as the arrows showed in that short add-on or new entry today, these are your targets right there. And if hit, that's going to be a double-digit gain, healthy double-digit gain, and that's it. So not much more to add. I know, again, it's not a big guess. You can see from the number of comments in the recent trades that I've highlighted that the lack of comments show the lack of interest in those. Usually the ones that most people are taking are the ones that have the most comments. And so, yeah, it's been kind of quiet lately. Okay, and if I missed any, I can see a bunch here. I think I'm up to speed. I will try to catch up on these today before I shut down. Yeah, it looks like I'm caught up. Okay. Yeah, okay, I'm caught up, I believe, on comments. So I'll do my best to check. If there's anything I missed in the last few days, do me a favor, just post, bump me under the most recent post. When I post the video, it's not here yet. I'll post the video. That'll be the updated one. And I'll try to get back to those before the day is over. All right, I'm going to wrap it here. This has been Randy Finney with Right Side of the Chart. Have a great weekend.